Okay.
Good evening, everybody, and welcome to our webinar session for today. So my name is Edwin, and with me is Nobert Kiza. So Nobert is new and he's based in Uganda. Karibu sana Nobert.
Asante. Thank you so much, Edwin. I'm happy to
Yes.
be here.
How is Uganda?
Uganda is it's doing really well. Yeah.
Mm-hmm.
A bit
Interesting.
rainy and cold, but otherwise it's doing well. Yeah. Thank you.
Yeah, so we just recently opened an office in Uganda, and Kiza will be our education partner, and he'll be helping us from that end. So yeah, so today we will be looking at trading reversal and continuation patterns, majorly focusing on wedges and how you can be able to identify these patterns and use them to identify entries or form part of your whole trading strategy. So I think Norbert, you can start us off.
Right. Thank you so much, Edwin.
Yes.
Yeah. So like Edwin has said, today we are going to be focusing on reversal patterns and continuation patterns. I'm sure a number of traders obviously are not new to this type of technical tool in analysis. I think as you see here, reversal patterns are essentially just an appearance of price prints that indicate there's a potential or likelihood of a change in a trend of a particular asset. So reversals happen on several CFDs assets. And usually when they occur, they need a bit of assessment for you to actually determine whether this is something that you can analyze for a potential future prediction. Yeah, so reversal patterns are used to identify potential buy or sell signals. That's where when a reversal pattern appears, you could use it to gain by buying the asset or use it by selling the asset. And it's very, very crucial that as traders, we understand how they work and how we can identify them and add them to our various trading plans and strategies. There are essentially three particular types of patterns. One is a bullish reversal pattern, and I'm sure most of you know what bullish means. Bullish essentially means buy, or it means going long. And when this pattern appears, it shows us there's a potential that we could actually use the pattern to actually buy and gain from the market through that. The same is also true for bearish. If it appears, then we can actually use it to sell. Continuation patterns, when they appear, they show us that a particular trend, because either you're having a long-term trend or you're having a short-term trend. And usually when you have a continuation pattern, it shows that that trend is still intact and there's that just a pause in movement before the trend resumes. Yeah, so now we are going to focus on wedges, and wedges particularly have three particular characteristics. We have two converging trend lines. Trend lines essentially mean just lines that track movement in the market, and usually they connect particular support levels. Sometimes, it's also true that they also connect particular resistance levels. And usually you will determine this kind of wedge forming when there's declining volume for one particular side of the market. There could be declining volume for the bulls or declining volume for the bears. And when you see this declining volume, it shows that the pattern is underway and is currently being formed. And a breakout appears and is also one particular crucial characteristics that you have to identify when you're identifying a wedge. And the breakout will either appear in favor of a buy or in favor of a sell. So here that we have in front of us is a currency pair. We have AUD NZ H4, and essentially what we are seeing here is we are seeing a movement of a forming rising trend, ascending trend on the AUD USD. And as you see here, essentially what we are seeing Apologies for that. What we are seeing here is that there's a rising trend for AUDNZ. And as you can see, the pattern was setting itself up for a potential breakout to the downside. And we saw rising lower highs and then rising lower lows that essentially met at a certain resistance point that you're seeing right at the end of the trend line that's above the first trend line. And then we saw a breakout, and you see this breakout was really extended. And this essentially showed us that a wedge had actually formed. And if a trader had started forming their converging trend lines, they would have identified this breakout to the downside. All right, so we have different types of wedges. We have two types of rising wedges. So one essentially will appear when we have a reversal in an uptrend, and the other one, like I said, is a continuation. So it's crucial that we determine whether a trend is actually continuing or a trend is being changed. So now here we have a reversal of an uptrend, just we had seen in AUD-NZ. The only difference that we're having here when you fix your focus on the top left box, we are seeing that there was a breakout to the downside, but we saw a retest, which also indicated that maybe price was continuing. But you saw that there was a bit of a resistance level that appeared there, and the price continued to the downside. Rather reverse to the downside. So when we identify these certain points where we see that price action has actually been hindered at a certain level, as you can see, those supports were holding strong until they eventually were not holding strong, and we saw that the price changed. Now, a continuation of a downtrend. Here we are seeing this long line. I'll fix your focus to the left side, the top right box. As you can see, we have a sharp movement down in the market with that very long line moving downwards, and then now we had the wedge starting to form. So now it almost looks similar to the reverse on the uptrend, but the only difference here is that we had a previous downtrend appearing. So bulls almost seemed as though they were taking charge, but then they eventually failed to reverse this downtrend, and that downtrend continued. We saw a retest there, but the retest also failed. Now, the one at the bottom right, we can see that there wasn't actually any attempt for a retest of that support. And we just saw that when the price action broke that level, it went straight away to the downside. So here we had a continuation of a downtrend. Yeah, so the other one that we have that's very crucial is a falling wedge. Now, a falling wedge also is described as a descending wedge. Now, as you see here, essentially what we're happening is we are seeing a reversal of an uptrend. So now, as you can see here, we had let me fix your focus to that top left box. As you can see here, we had a bit of a movement in downwards, and then we had bulls now coming into control. And as you can see here, the supports were almost on the same level, and you'll see this very clear in the market. Sometimes, of course, you have to change the chart you're looking at to a line chart for you to be able to identify and also to filter out the noise that appears using candlesticks. So as you can see here, the wedge appeared and we had lower highs, but then we saw that there was a breakout, but then there was a retest of that of the level that was appearing as the lower highs here. So it is crucial that we look out for that retest, and then we see whether there's going to be a continuation of a downtrend or whether it's going to reverse. As you can see here, there was a reversal and an uptrend formed. So the bottom one, we see that there was no retest. Here we just had a breakout. And usually when that appears, it means that bulls actually have come into full control. And you also have to monitor volume to see essentially what is really happening. Are the bulls in control or the bears in control? Now, when you cross over to the continuation of a downtrend, as you can see, it almost seemed as though there was a strong uptrend starting, but then there was a sharp rejection there. And then we now started to see a wedge forming with lower highs. As you can see, the supports also were not trying their best, and the price movement or price action was still in favor of the bears. So when we saw here, there was essentially a movement and a break of that lower high. We then saw a retest, and then we saw price moving upwards after that. Now, when you look at the bottom one, there was no retest, and essentially what happened is the volume was in favor of the bulls, and we saw that that reversal continued strongly upwards. Yeah. Yeah. So
All right.
how? Yep. All right.
Yes. Yes. So I think I'll pick from here. Thank you so much, Nobert, for that.
You're most welcome,
that
Edwin.
good introduction. Yes. So when it comes to using rising wedges, just like any other form of pattern, it's good to trade it. It's good to make it like a piece of the puzzle. You have your system in place, or you have your strategy in place, then this pattern is just to enhance your ability to know how you're going to tackle the market. So always know that at the back of your mind. So how then can you use these patterns to trade as part of your strategy? So basically, the first thing is to identify, and it's always good, and I always insist that it would be good to scan through various charts in order to see what is happening. And it's only doing that then you can be able to spot some of these patterns. So once you spot the pattern, so for example, if you're dealing with a rising wedge, you first have to trace it. Of course, you'll have identified the rising, you'll have identified the peaks as well as the low points. Then you'll just pick your trend line from the chart and trace it and project it. So you're supposed to project those lines so that you identify the path along which price is likely to oscillate within. Then it's at the point when the price comes back to either side of the wedge that you then take interest to gauge and see the mood of the market and how price is likely to react within that level where you have your trend line. So when it comes to a rising wedge, depending on whether it's continuation or a reversal, so like in this case, it's a reversal, you'll enter the point at which price breaks below that pattern. And you'll be able to know the break has already happened if you're to have a number of candlesticks forming either below that trend line, or if you're dealing with a continuation, then it would be above the upper trend line. So in this case, within this zone, you'll have identified that the market is already pushing towards the lower side. At this point, you'll have identified the start of that reversal to the downside. So your entry, or the most ideal point to enter, would be around this area. Then your stop loss can be set based on the previous high point. So you can set it right above, a few pips above the previous highest point. Then, depending on how well you're able to manage that trade, you can use the previous higher lows as your exit levels. So your previous higher lows should be your targeted areas of exit. So if you decide to scale out of that trade by closing it partially, then you can use those previous highs to exit, because as you can see, with this trade or with this setup, that movement was sustained for quite some time, and you could have been able to maximize on that movement by scaling out of that trade. So it's always good to close the trade partially when you're targeting to hold the trade longer, so that you can minimize the risk that you might be holding with that trade. Then when it comes to a falling wedge, you'd have something close to this. Again, this is an example of a trend reversal. In this case, you target to enter at the break. So like in this case, we had the market breaking, then there was a retest. So right after that retest, that would have been the most ideal entry. So right from this candlestick, you could have entered your buy position, targeting that further upward momentum. So in this case, the most ideal point to have entered your stop loss is right below this previous low. Then you'd use the previous lower highs as your targeted areas of scaling out of your trade. So if you decide to close the trade partially, you'd use the previous lower highs to exit your trade, because again, as you can see, this momentum was sustained for quite some time, and we were able to reach the peak at which we had the first, or the peak where we had this pattern, or the genesis of this pattern, or where it began. So yeah, so I think now we can jump into the charts to have a look a few examples. So I was scanning through the charts, Nobert, and I noticed that in the recent past, we've had these patterns manifesting on Kiwi pairs, Euro pairs, and Swiss franc pairs. So I think I can share just to have an idea. So at present, if you look at Euro dollar 4-hourly chart, Nobert, are you able to see my my platform?
Yes, I can.
Yes, so at the moment we have Euro USD and we have a rising wedge. So at the moment, within the last 4 hours, price was trying to break the lower trend line. So this pair would be of interest moving forward within the next few hours, but most especially London session tomorrow, depending on how a price will have played out within the next few hours. So this is a good candidate to try and utilize the current rising wedge which is at play to trade, to find a trade tomorrow. Then if you look at Euro Canadian dollar, in the recent past, we've had a formation of a rising wedge as well. So this is quite clear cut. And this was a reversal. And although that momentum was not sustained for long, at least at the point where the market broke the lower trend line, we could have obtained an entry for a sell. So if you look at this pattern, you'll notice that at this point, we had a bearish rejection candlestick, and it sort of formed an inside bar at the point at which the market broke that pattern. Then we had a continuation further down. And if you look at the point where the market, or where the momentum fizzled out, it's right along where we had the previous low. So if you had set this as your targeted area of exit, you could have had that trade closing by around 220 pips right from the entry point. Then fast forward, last week we had another formation. So this was a continuation pattern. So we had the market breaking the upper side, and the point at which the market broke, we also had a bullish pin bar, which could have acted as an additional indication for you to consider. Then once the market broke, that momentum was sustained, and price was able to rise by roughly close to 325 pips up to that point. Between 325, between 280 to 325, we were to consider that week there. So it's quite a pretty big movement. Then the next example is New Zealand dollar against US dollar. So this was a while back. It was sometimes in January, towards the end of January. So this was a rising wedge, and it was a reversal pattern. So here you'd be able to see that we had a very strong bearish engulfing candlestick, the point at which the market broke that wedge. And as you can see, you'd be able to see that if you're using the previous higher lows of that wedge, you'd have been able to exit around this point. So right from the entry all through, if you had set your take profit based on this previous low, you could have managed to make around 225, between 200 pips up to around 225 pips on that setup. Then the next example is New Zealand dollar against Canadian dollar. Again, this was towards the end of January, sometimes in early Feb. That is when this pattern broke out. Again, this is a rising wedge, which culminated into a reversal. And just as the previous examples which I've given, you'll be able to see that right at the entry point up to where we had the previous low, we could have had around 100 pips. And if you had set your take profit based on that previous low, then you could have hit your target. Then fast forward, the first low was hit as well, though it took a bit of time. So it could have taken you around 2 weeks to have the first low being hit. Then the last example is
This is a really good example, Edwin, the NZ card. You
yes.
can really see actually that even when price broke that converging trend line, the bottom one, we can see that the intensity of that sell was actually accelerated, because the previous ones have showed that even when you have a break to the low, to a break lower, then you still have a bit of bulls in charge, and they're still, you know, extending the movement. But here you can see, even when you look at the third, if you bring your cursor there to that third support, this one here in the middle, you can see that the support that formed after
this
it
one
was, yes, that's no, the one right above there. The support that formed right at it was lower, and then it got lower and lower and lower. So I think really this was a really, really good formation for a sell on that one. Yeah.
Yeah, it was a very nice setup. Then the last one is Swiss franc against yen. I most especially prefer the ones where you have the wedge slanting upwards, because once it breaks out, there's always that tendency to have price accelerating quite far to the downside. Yeah, so this again was another good example. So this broke out around mid-March, and as you can see, we had a strong bearish candlestick, which was able to engulf the previous bullish momentum towards the end of that pattern formation. And as you can see, once that pattern broke, we were able to hit, or price was able to hit this particular low. And we could have also gotten, or we could have, we could have gotten our trade closed if we had set our take profit around that area. So both these lows were hit. So that, as well as this. So right from the breakout, with this low, you could have gotten around 350 pips. On that low, you could have gotten around 450 pips based on this week. So yeah, so those are the most recent patterns which I've been able to spot. I don't know whether you've seen any from your side, apart from the ones that I've checked, Nobert. Nobert, can you hear me?
Yes, Edwin. Yeah. So
Yes.
yeah.
Yeah.
Sorry,
So
I
those are
was still muted. Yeah. Yeah.
yeah. So
On gold, I think there was a good formation on it. That was, I think, in October. Those of you who are trading, you can actually check out on the charts. October 2022. There was a
you can share.
really no, I can't share at the moment.
Okay, no
But
problem.
the traders can check it out. Gold, there was a really good formation on gold.
Which
To
time frame?
the sorry.
The time frame?
On the weekly, if you check gold on a weekly, there was a good formation on it that presented a good opportunity. It was actually it was a bit of a confusing setup because price was tied up in a range, but the supports almost seemed as though they were in favor of a reversal to the upside, and we had supports that were higher lows, and then we had a break, and I think it was around that time also. When there was a bit of news regarding central bank gold purchases, so I think intensified that move, but also I think that the patterns were in favor of an upside move. Yeah, so just check out gold in October 2022 for that example. Yeah.
Yeah, at times I noticed that some of these patterns align with key events. The point at which key events are announced. So it's always good to it's always good to marry fundamentals with technical analysis in order to have a watertight setup to trade. So yeah, so I think that's it from our side. Not unless you have something to add, Norbert. I think that would be it.
I think that's pretty much it.
Yes.
And of course, what's also important is much as we keep, of course, that I think the main takeaway for this one is the characteristics. They are quite clear, and there's a bit of resonance across all the different wedges. I think, as you've seen, there are two particular trend lines. There's a breakout. You will see that the candlestick patterns will also be in line of that movement. But as we mentioned earlier, it's very, very important that you add the wedges to your strategy, and that you also have to keep track for volume. Volume usually shows you what is actually happening in the market, who is in control, what sentiment is there for bulls, what sentiment is there for bears. And then in addition to that, then you can see that actually the wedge is going to form in that favor. Yeah, thank you so much. I think that's pretty much it for me. And I wish you all happy trading. One thing which I always keep saying, Edwin, is that as traders, to see another day in the markets, we need to ensure that we have risk management, guys. It's very, very crucial. And, you need to see another day in the market, because whoever is in this business, it's a business of sustainability. It's a business of ensuring that, you see another day in the market, and it can actually be something that you can add to whatever income you're getting. So please always have risk management in addition to whatever it is that you're doing. Yeah, thank you so much. That's it from me.
Most definitely, Nobert. All right, so that brings us to the end of today's session. So we hope you've been able to pick something from what we've covered. And we hope that it's going to be of great use as you trade. So at this point, we come to the end of the session, and we hope to meet you soon in our next session this coming Wednesday. So enjoy the rest of your evening and happy trading.
Happy trading, guys.